The week of October 27th to 31st, 2025, delivered a compelling snapshot of the financial health and momentum across multiple sectors of the global economy. Investors, analysts, and corporate leaders closely monitored earnings reports spanning technology, energy, financials, industrials, consumer goods, and healthcare. This period is particularly significant because it not only reflects quarterly performance, but also serves as a barometer for broader market sentiment, investor risk appetite, and emerging trends that may define the trajectory of the remainder of 2025. In the technology sector, earnings from big tech giants such as Meta, Microsoft, Amazon, Alphabet, Apple, and PayPal have become critical indicators of market direction. These companies dominate both the domestic and global tech landscape, shaping trends in cloud computing, artificial intelligence, social media, and digital payments. Analysts are particularly focused on how AI initiatives, regulatory scrutiny, and global supply chain pressures affect revenue growth, profit margins, and future investment priorities. Meanwhile, growth and emerging tech firms, including Roblox, Roku, Etsy, Mercado Libre, Cloudflare, Confluent, and Teradyne, offer insights into market appetite for risk, innovation adoption, and consumer engagement in both digital and physical marketplaces. The performance of these companies often reflects the tension between optimism for transformative technologies and caution around elevated valuations. Energy markets also provided a critical lens into corporate resilience, market expectations, and the transition from traditional fossil fuels to renewable energy. Companies like ExxonMobil, Chevron, and Nine Energy Service face scrutiny regarding oil price volatility, operational costs, and regulatory pressures, while renewable energy players such as Bloom Energy and Daqo New Energy were evaluated for their technological advancements, capacity expansion, and ability to compete in a rapidly evolving energy ecosystem. The combination of earnings results, policy updates, and global energy demand signals both immediate challenges and long-term opportunities. Financials, encompassing banks, payment platforms, and asset managers, provide another essential dimension of the week's earnings landscape. Firms such as HSBC, Bank of Hawaii, PayPal, Coinbase, and Robinhood markets reflect the health of the banking and fintech sectors, highlighting trends in lending, trading volumes, payment processing, and cryptocurrency adoption. Meanwhile, investment firms and asset management companies, including Blue Owl, BMRC, and Government Properties Inc., offer perspective on capital flows, market sentiment, and institutional investment behavior. Financial earnings not only reflect corporate health, but also provide a proxy for investor confidence and risk appetite across broader markets. Industrials and infrastructure companies offer insight into global supply chains, production costs, and demand dynamics. Caterpillar, Quanta, Flex, and LyondellBasell, along with transportation and airline operators such as United Airlines, Delta Airlines, Avis Budget Group, and JetBlue, exemplify how macroeconomic factors, including inflation, trade policies, and labor availability, translate into operational outcomes. Quarterly results from these firms reveal the resilience of industrial production, the efficiency of logistics networks, and the effectiveness of cost management strategies amid ongoing economic uncertainties. Finally, consumer goods and healthcare earnings highlight trends in discretionary spending, inflation pressures, demographic shifts, and pharmaceutical innovation. Carter's, Chipotle, Sprouts Farmers Market, and Kraft Heinz illustrate the intersection of consumer behavior, supply chain management, and pricing power. Meanwhile, healthcare and pharmaceutical companies such as Lilly, AbbVie, Regeneron, Insmed, CVS Health, and Centene provide insights into pipeline development, regulatory approvals, and long-term growth potential in a sector that remains relatively insulated from macroeconomic shocks. Across all these sectors, the earnings of the week serve as a diagnostic tool, revealing how companies respond to operational pressures, technological disruption, policy shifts, and shifting consumer preferences. These results not only affect short-term stock prices, but also provide guidance for investors, strategic planners, and regulators seeking to understand both sector-specific trends and the broader economic landscape. The technology and internet sector remains the primary driver of market sentiment and economic growth in 2025. This week, earnings from big tech giants, Meta, Microsoft, Amazon, Alphabet, Apple, and PayPal, provided key insights into both corporate strategy and the broader industry trajectory. Each of these companies occupies a dominant position in its respective niche. Meta in social media and virtual reality, Microsoft in enterprise software and cloud computing, Amazon in e-commerce and AWS cloud services, Alphabet in search and AI applications, Apple in consumer electronics and ecosystem integration, and PayPal in digital payments and fintech services. Meta's performance, for example, reflects the dual forces of advertising revenue and investment in AI-driven products, such as augmented reality and generative AI tools. Microsoft continues to show strong cloud growth with Azure, while balancing enterprise licensing and Office subscription services. Amazon's AWS business remains a major profit engine, though supply chain costs, energy expenditures, and evolving consumer behavior affect margins. Alphabet's earnings highlight both ad revenue resilience and AI development costs, with strategic investments in generative AI shaping market perception. Apple's results provide insight into hardware adoption and ecosystem expansion, particularly in wearables and augmented reality devices. PayPal's revenue metrics reveal trends in online payments, cryptocurrency adoption, and fee structures across global markets. Growth in emerging tech companies, including Roblox, Roku, Etsy, Mercado Libre, Cloudflare, Confluent, and Teradyne, offer additional signals. These companies demonstrate how digital platforms, media streaming, e-commerce, and semiconductor technologies continue to scale rapidly, with revenue growth often outpacing traditional metrics of profitability. For example, Roblox illustrates ongoing engagement among younger demographics, while Roku reflects the evolution of connected TV and advertising monetization. Etsy's performance highlights consumer demand for niche, handcrafted goods, while Mercado Libre continues to lead in Latin American e-commerce. Cloudflare and Confluent provide infrastructure services critical for AI and cloud-native applications, and Teradyne's earnings indicate trends in semiconductor testing and automation. The key focus for investors is how the combination of big tech and emerging growth stocks reflects both market optimism and risk appetite. Strong earnings suggest continued investment in AI, cloud computing, and digital services, whereas mixed or underwhelming results may signal caution, particularly in high valuation tech segments. Analysts emphasize that the tech sector's performance this week will likely influence broader equity markets, with ripple effects across growth-oriented indices and sector-specific ETFs. Speaker notes emphasize the dominance of big tech in shaping both sector sentiment and overall market performance, highlight how earnings reflect innovation cycles, AI investment, cloud growth, and digital monetization strategies. Discuss the risk/return balance for growth versus established tech companies, using emerging players to illustrate market appetite for innovation. Energy sector earnings this week illustrate both the resilience of traditional energy producers and the growth potential in renewable and storage technologies. Traditional energy companies such as ExxonMobil, Chevron, Nine Energy Service, and Alcoa continue to be influenced by oil prices, regulatory frameworks, and supply chain dynamics. Rising or falling crude prices directly impact revenue, while operational efficiencies, environmental compliance, and geopolitical factors shape profitability. Renewable energy companies like Bloom Energy and Daqo New Energy reflect the ongoing transition toward sustainable energy infrastructure. Bloom Energy, focused on fuel cells and distributed energy systems, reported revenue growth tied to installations and maintenance contracts. Daqo New Energy, specializing in polysilicon production for solar panels, demonstrated capacity expansion and cost reduction achievements. These results indicate that renewable companies are increasingly competitive with traditional energy producers, although margins remain sensitive to commodity costs, government subsidies, and technological advancements. The key analytical takeaway is how energy earnings intersect with global policy and investment trends. Traditional energy profits are vulnerable to macroeconomic shocks, such as trade disruptions, currency fluctuations, and regulatory interventions, while renewables demonstrate the potential for scalable growth and technological leadership. Investors should consider both short-term profitability and long-term strategic positioning, particularly as governments incentivize clean energy adoption and as corporates pursue ESG compliance. Speaker notes highlight the dual nature of the energy sector, established oil and gas companies versus emerging renewable energy firms. Discuss how oil prices, regulation, and capacity affect earnings. Emphasize the importance of long-term technological investment for renewables, noting government policies and supply chain implications. Financial sector earnings reveal how banks, fintech platforms, and asset managers are navigating a rapidly evolving economic landscape. Traditional banks such as HSBC and Bank of Hawaii reflect the impact of interest rate changes, credit risk, and loan growth on profitability. Fintech platforms including PayPal, Coinbase, and Robinhood markets show trends in transaction volumes, digital payments adoption, and cryptocurrency market participation. Investment and asset management firms such as Blue Owl, BMRC, and Government Properties Inc. provide insight into capital allocation, risk management, and institutional investor behavior. Revenue growth and asset management fees are closely monitored as they reflect broader investor confidence and market liquidity. For fintech companies, earnings reveal both opportunity and vulnerability. High transaction volumes can drive revenue, but regulatory scrutiny, cybersecurity threats, and market volatility pose ongoing risks. Analysts focus on how earnings trends may influence market sentiment. Banks are often a barometer of the broader economy, while fintech companies signal the speed of digital adoption and disruption of traditional financial services. Asset managers' performance reflects institutional risk appetite and market positioning, making this sector pivotal for investor decision-making. Speaker notes emphasize that financial sector earnings combine insights into both traditional and digital finance. Discuss how bank profitability, fintech growth, and asset management trends provide a holistic view of economic health. Highlight regulatory, cybersecurity, and macroeconomic considerations affecting results. Industrials and infrastructure earnings provide a view into production efficiency, trade impacts, and operational resilience. Industrial and manufacturing companies such as Caterpillar, Quanta, Flex, and LyondellBasell reported performance tied to new orders, cost pressures, and supply chain management. Caterpillar, for instance, reflects demand in construction and mining, while Flex demonstrates electronics manufacturing trends that influence consumer and enterprise technology production. Transportation and airline companies, including United Airlines, Delta Airlines, Avis Budget Group, and JetBlue, highlight the interplay between operational costs, fuel prices, and travel demand. Airlines are sensitive to macroeconomic factors, such as ticket pricing, labor availability, and fuel volatility. Logistics firms within industrial supply chains must navigate global trade tensions and regulatory shifts, which can significantly affect both earnings and operational planning. Speaker notes highlight the critical role of industrial and transportation earnings in understanding global economic activity, discuss cost pressures, supply chain efficiency, and trade impact. Note how operational resilience, capacity management, and strategic investments influence profitability in these sectors. Consumer goods and healthcare earnings offer a lens into both discretionary spending and essential service demand. Consumer companies like Carter's, Chipotle, Sprouts Farmers Market, and Kraft Heinz reflect trends in purchasing behavior, pricing power, and supply chain management. Inflationary pressures, changing consumer preferences, and product innovation are key drivers of revenue and profitability. Healthcare and pharmaceutical firms, including Lilly, AbbVie, Regeneron, Insmed, CVS Health, and Centene, provide insights into long-term growth, pipeline development, and regulatory compliance. Drug approvals, pipeline milestones, and demographic trends significantly influence financial performance. Healthcare earnings also act as an indicator of resilience during economic